Welcome back, ladies and gentlemen. As promised, we're going to dig into this whole question about how a stronger dollar affects you, or a weaker dollar for that matter. To do that, we brought back a returning guest, Leo Haviland. He is in our studio with us. Leo, welcome back.
David, thanks very much to be back on your show. It's great to be with you.
Yeah, we're glad to have you. And of course, we're going to leverage your 30-plus years of expertise working on Wall Street. I know that you've authored books. You are a writer, ongoing columnist, and essay writer, and you are all about this macroeconomic stuff that for a lot of us, quite candidly, it's a little bit removed, but it has a huge impact on our day-to-day lives. And so that's part of what we want to share with the viewers is how these big things that, you know, the translation of the dollar versus the euro and economic commerce around the world, how those things affect us personally in our pocketbooks. So the first question I want to get to is, how does a stronger dollar, which sounds good, how does that affect consumers?
Well, a stronger dollar, if someone is going overseas, such as a tourist,
Sure.
can have probably a much more entertaining time.
I mentioned ice cream and suits.
That's right. However, apart from the consumer, we also should be looking at businesses. And say a U.S. manufacturer whose corporation is selling overseas, if the dollar gets stronger and stronger and stronger, at some point becomes less competitive, no matter how hard they are working or how smart they are.
No matter how good their product, how strongly they think they've priced it in the marketplace, they could be at a purely economic disadvantage because their currency is stronger.
Right.
It seems counterintuitive, doesn't it?
Much in life is counterintuitive.
Okay, fair enough. Well, so if you're an airplane manufacturer and you're trying to sell your planes and you're competing, you're a domestic airplane manufacturer and you're competing against a British one, and they have a currency that has lost value versus yours, it's going to be a challenge.
It will be a challenge because in such a globalized world as we have these days, various countries, individuals, businesses around the world are looking for what is the least expensive to them.
Absolutely. Now, people hear that and they go, well, hey, that's a big company. I'm not that worried, Leo, about how a big company does and if they're not as profitable selling planes in Europe or whatever. But all of that will impact us in a lot of ways. The value of that company that's publicly traded, as the value isn't as good. They hire people in the United States to make those planes. They may not need to hire as many, or they might have to lay off people. It's a ripple effect.
That's right. And the cost of labor and currency levels influence, as the past election season indicated, that they matter. And they matter not just to Wall Street persons, but to persons on Main Street.
What are some of the big things that drive, and again, this is a half-hour show, but we'll get to what we can here, Leo. What are some of the big factors, these macro factors that I know you study continually? What are some of those factors that affect the strength of one currency versus another?
One can break it down into the internal economic situation, the internal political situation, and then how countries are interacting with each other. And another set of parameters, of course, would be what are interest rates, what are stocks, what are commodities.
Okay.
And we're in such an entangled world
Right.
that what happens, say, in the dollar is influenced by all these. In practice, a key factor is interest rates.
Okay.
So all else equal, if interest rates appear attractive, the currency in which those interest rates are denominated looks like an attractive currency.
Okay, so money comes on shore, so to speak, to the U.S. when our interest rates move up. And again, we talked about, there's an element here of safety, but if interest rates rise, then money comes on shore. There's more demand for those dollars, which puts demand on dollars. And when there's more demand for something, all other things being equal, the value or price of that, whatever it is, goes up. Now, of course, we've got the other piece of this, which is monetary policy and how many dollars are in the system, but that's kind of a separate thing, but still related. So all of that conspires to affect the price every second of a currency, one currency versus another.
That's right. On the political standpoint, for example, if you take a nation, whether it's America or elsewhere, and say, what quality leadership do they have? Is the community of its citizens getting along well? If there look like severe problems, whether it's an advanced nation like the United States or an emerging marketplace, that influences their currency levels.
Good point. We see that, of course, being a concern that people have for the United States when we go through our political transitions, but also we see it really on a regular basis in some other areas around the world. And just as an example, and I'm not picking on them, but South America, we've seen some of their currencies fluctuate wildly, and it's really in direct response to some of the perceived instability.
That's correct.
Interesting. So, again, the viewers are going to want us to talk a little bit, Leo, about how this translates to impacting them. We talked about performance of the markets and performance of the overall economy, but this can really be something that affects everybody overall and for a long period of time.
Yes, because many of your colleagues and many on Main Street, for example, have substantial stock marketplace holdings. What happens with the dollar can influence, to some extent, the trend in the S&P 500 or the Dow Jones Industrial Average. And at the beginning of 2016, we saw the trade-weighted dollar reach, at that time, record highs. And where was the S&P 500? At the middle of first quarter, it had been declining. Now we're seeing the dollar achieving new highs. For those on what Main Street, maybe they should be looking at the dollar because of their other asset holdings.
Yeah, maybe a little bit of a yellow light flashing.
Yes.
Yeah. Well, so if we were to summarize it, the tourist, maybe they want cheap, they want cheap goods abroad, meaning they got a strong dollar to spend. But for U.S. businesses, we want, in terms of our international trade and all of that, and also the competitiveness of our product domestically, we would prefer a weaker dollar. Well, as a general statement.
Well, if we manufactured a lot more compared to some nations, maybe we'd prefer a somewhat weaker dollar.
Okay.
But it's a case-by-case situation. Ideally, I suppose, most Americans and most other countries would like relatively stable exchange rates.
Oh, definitely.
Because then they'd be able to plan. So then the
key.
consumers and the exporters, importers, they all reach some kind of rough balance.
I got you. I'm with you. Well, there's no way to complete a discussion about the dollar and its strength or weaknesses and whether that's good or bad without bringing in, you know what I'm going to say, Leo, gold. Okay? So where does gold fit into this? Because, when people get worried about the dollar or they worry about the market, we all of a sudden see a heightened interest, increased preoccupation with gold. One, why is that? And is that something we should be thinking about?
We should be thinking about it, David. You're making an excellent point. Gold has interest, of course, historically as a store of value, but suppose here or elsewhere, many became worried about too high inflation.
Okay.
That will attract gold buyers. If there's concern about the financial system as a whole and meltdown in currency values and responsibility of governments, that could attract gold buyers. But getting back to the US dollar, there's been many cases where if the dollar is vulnerable, rising gold prices can confirm that. And sometimes we can see, as we did in many instances in the past, gold gave a sign to those who wanted to watch the dollar.
Interesting. Well, you've got something that I think you've touched on that brought me to another point, Leo, and that is that we've got this valuation of the dollar versus currency overseas. Then we've got it against a precious metal like gold, which has been, of course, the gold standard, no pun intended. And then we've also got, though, intra-U.S. domestic inflation, where nothing to do with currency overseas, but we've got the dollar maybe buying less goods versus more goods, and we can have inflation or deflation. So this is really, it's got different, it's like different cameras, different
Yes.
camera angles on our doing this program. You've got different camera angles on how we look at the value of the dollar and how far it will go.
Right, and because it's important to America and because so many insiders on Wall Street and international firms around the world look at it, that it pays for Main Street individuals and those looking at retirement and other issues to concentrate very closely on longer run dollar trends.
I see. So if we're concerned, let's bring this to a point, if we're concerned about a strengthening dollar having a potential negative impact, we should reevaluate, or at least consider reevaluating our market exposure in terms of both domestic but also internationally as well, right?
Right.
Then also think about the impact that might have on bonds and interest rates, and then not to leave out cash in the bank.
Right. And also, the global economy has not just American stocks, but has emerging marketplace equities. And the stronger dollar, given the indebtedness and relative weakness of some of the foreign countries, can cause emerging marketplace stocks to weaken. And at times in the past several years, that has influenced American stock trends. So we need to watch the dollar pretty closely.
Yeah, it kind of keeps going in a circle. We're like,
Yes.
wait a minute, when does this Ferris wheel get, I want to jump off. So you brought up the developing countries, and I think that's an excellent point, Leo, because a lot of them are commodities based. You look at any country maybe that is heavy on oil production, and if the dollar gets really strong, and that means that those dollars being stronger will buy more oil versus the previous dollars, right? Then that's going to translate to less economic benefit to the country or the people selling that oil to us. That can have a huge impact on their economy.
Right.
So diversification is great, but we need to think about how we are allocating both our domestic stock exposure, but also the international. Now, the textbook answer from financial advisors or investment people is that, well, we want to have some U.S. and Canada, and we want to have some international. Keep some in both. Does that wisdom hold up during a either rising dollar or falling dollar?
The risk is that not only is there a substantial shift in dollar levels, which can affect stocks overseas and here, but what's going to happen with interest rates? And for example, if interest rates go up, that can cause damage not just to our bond portfolio, but to our equity portfolios. Also, at some point, the dollar becomes so strong that there's a countervailing trend in equities. It's not automatic, of course, but it's a risk that audience should consider. And remember that sometimes it's wise not only to diversify, but maybe not to own as much of something.
That's fair. That's fairly put. So it may be a time when you see the dollar strengthening to reevaluate your equity exposure. If things have gone well, especially if we've been in an extended bull market, to say, well, wait a minute. I know bull markets don't go on forever. Maybe it's time to reevaluate, and there's nothing wrong with, in fact, most gamblers would say, there's nothing wrong with at some point taking some of the chips off the table, right?
Right. It's nice to have money in the bank, and you can stay at a table too long.
Fair enough, and the house does eventually win, right? So some people look at it like, well, I'll take some of what I originally put in and I'll play with the house's money, which is not a bad strategy. So we've got a multifaceted impact here, Leo. That's one of the key things I think the viewers need to take away is that these changing currency values and valuations are affected by a lot of things, and they can affect us in a lot of ways. And you touched on it. We can't also leave this program today without recognizing the political implications. When we have political changes and shifts like we've seen in other countries, but also here in the United States, a shift, that can have an impact on the strength of the dollar as well.
That's true. And given that the dollar has been going up over roughly 6 years, arguably it's, that being the dollar, very vulnerable to a change in trend.
So, on one hand, we can't say, well, because this happened in the past, Leo, that it's going to happen now. But there is a historical context for everything that we see be it today or 3 or 4 or 5 years from now.
Yes, yeah. History need not repeat itself, but it pays us to give it a look.
Yeah, that's interesting. I'm thinking that through, that's a way of saying it may not repeat itself, but it may certainly be indicative of
Right.
what can happen when certain things unfold, both in terms of the dollar, shifting economic policy, fiscal policy, monetary policy, lots of policies that we have to figure in. So final thoughts for us, for our audience, about maybe some things they should be thinking about?
Just pay attention to the dollar, rates, and stocks and gold all together and keep an eye on them.
Excellent, very good, good points. Our guest today, Leo Haviland, joining us today, doing a lot of macroeconomic work. If you'd like to learn more about Leo and what he does on a day-to-day basis studying these things, then go to our website, planstrongertv.com, and you can learn more about Leo and his work and author and all of the things that you're doing. Thanks for being with us, Leo.
Thanks for having me, David. It's been an honor.
Pleasure.
If you would like more information about the topics and our guests featured in this series, please visit our website at planstrongertv.com. Also, if you have a question you would like David to answer, please send it to questions@planstrongertv.com.